Hello, hello. How are you all doing? It's been 2 weeks, I believe. Stephen, how you doing? John B. It's always the same guys right here. Peter, right to the door at the beginning. Hope you guys have had a good Easter last week, and obviously, happy Easter to all who are celebrating it last week. A bit of a belated wishes, but there we go. Cool. People are building up. So as per usual, guys, I'll just wait probably just 1 minute for like 1-2 minutes just before I really get started, because a lot of people sort of trickle in as they do for real life events. There's always like those guys sitting in the back who come in late. So I'll just wait for those guys to come in. But judging the fact that everyone's saying hello and no one's saying your mic's not working, I can pretty much guess the fact that everything's working as it should be. It's been 2 weeks, but I feel a bit rusty getting the whole setup going. So I hope everything's working as it is. Cool. So cool. So we're gonna get slowly started. How many days a month does it not rain in London? I don't know. Like, what is the sun? I've forgotten. I think we had 1 hour of sun today or something. But anyway, cool. So I think we can slowly dive into what I wanted to talk about. Probably the most philosophical of the topics, but I think it'll be a very, very good one. And I think with this one, I mean, I always encourage everyone to ask you questions, which, by the way, talking of questions, I really apologize to those in our Bond Q&A we did 2 weeks ago. Towards the end, I was asking, oh, send me your questions, send me your questions. And then I didn't see any questions coming in on my side, and I just assumed that there were no questions. But I think what happened is obviously the software we're using wasn't relaying your YouTube questions back to me, so I just assumed, I'll go through the previous questions. And just before I turned off the stream, I went on the YouTube one, and there was like a whole wall of questions. So really apologize to those guys who probably wanted questions on bonds. If you guys want something like that again, obviously we're gonna do something like that, and hopefully we'll answer it there. Hopefully, if it happens again, I'll remember, and then I'll go directly onto the YouTube questions and look at it from that side as well. Yeah, so apologies to those guys 2 weeks ago as well. And I do feel a bit funny today, guys. I don't know, I think it might be something I ate, so bear with me. Ask me questions, because I really want this to be a chat, and hopefully it might seem a bit strange, the point I'm trying to get at, but once I get through all the main points, the main 3 points I'm going to get at in the stream, hopefully once you tie it all together, you can all see like this kind of thing I'm building towards to really drive home, and hopefully it'll be a lot of value to you guys. And I think it's something, it's this kind of concept which is kind of like, I don't know what's the right metaphor, like 3 blind men touching an elephant, and they all describe different parts of the elephant, and trying to figure out what it is. So this is a conversation I had with a lot of people on the floor, and something I've been trying to digest myself in terms of understanding it. And hopefully, by just sort of explaining it to you guys, I can sort of distill it and really understand it myself better. Because to be honest, one of the great things about the stream, just streaming it for so long, is so much of the topics I've spoken about, really, I've just become a lot sharper in understanding it myself, and just really, instead of taking half an hour to describe it to someone, I can do it in 2 minutes or something. So it's actually helped a lot of my understanding, and hopefully this is something I'll achieve with this sort of concept, which I'll drive home. But just before we begin all of that, I'll highly recommend to all those watching, if you haven't watched already, guys, in the description you'll find a link to this webinar right here, elitetradingworkshop.com. If you haven't already, follow the link, guys, for some really, really good training from some of our senior members, something you haven't seen out there at all. I highly recommend you click on that link if you haven't, because it does interweave and interlace to a lot of the things we talk about in the streams as well. Okay, so let's get started. So I'm not picking out on anyone, I'm not singling anyone out, but it's interesting how engaging with the chat, engaging with you guys of various sort of levels, and not necessarily people from the stream. I think, people on the floor, or people who message us, all sorts of contact with other traders, let's say. One thing I keep picking up on is, if I were to summarize in my own words, really, it would be just purely from the questions you guys ask me or anyone. I can sort of pick out if your thinking is what I've put up here, what I put up here on the screen, is something is thinking very one-dimensionally versus thinking multi-dimensionally. Okay. And I think this is really the big thing that separates, one of the big things that separates the prop world from, shall we say, retail. And I hesitate to use retail in a bad sense, in a derogatory sense of the word, and I don't want to use it in a derogatory sense. So let's just place the word retail to some, let's say, to people who are interested in trading, but haven't crossed the path to consistent profitability. And if I had to summarize it as one, as a few things, one big thing is thinking one-dimensionally versus thinking multidimensionally, and I can sort of place people on the scale or on the curve of when they make this shift to thinking one-dimensionally and multidimensionally. And I've sort of talked about this on the other streams, and we'll get to it again. And the reason I can identify this is because I was also, when I first started a few years ago, I was also thinking very one-dimensionally. And you only make this jump, when people realize it different ways. You might realize it talking to people, debriefing and discussing, but you do realize how, when you look back, how one-dimensional you're thinking. And that really just manifests itself, when people ask you, what's one strategy, give me a simple strategy just to get started with, which is fine. You can see that, there's a bit of naiveness in that question, but, you want to get stuck in, you want to sort of, or that translates to, this what you're discussing here is too advanced. I want a simple strategy. I want a beginner strategy, okay? And you can infer that sort of the person asking that question all the time has this sort of, what's a beginner question? What's a beginner strategy? Something I can use my trading app on my phone to trade. It's kind of like this implication without realizing that there's some sort of like, that there's some sort of amateur league in trading. And I'm going to tell you now, there's no such thing as amateur league in trading, okay? And probably, a lot of you guys in the chat will agree with that. I don't need to tell you guys that right now, obviously. But it's just interesting from the way that people, talk and ask questions, you can pick that up. Or to be honest, you can tell how people, scale that up to make it a lot more nuanced. Like, which risk management, how should I manage my trades? Or what's the best trade risk management? And again, that's a very, very nuanced question. There's so many multidimensional aspects to what's the right risk management approach for you. Not one size fits all. That shouldn't surprise anyone. But is this sort of this grasping at a thing which is like the one thing I have to get to, and then that's it. A lot of you guys probably picked this up as well. And as Alex says, yeah, you want easy and you want it to be short. You want shortcuts. And I don't blame you guys. Everyone's the same when you start, but it's just making that transition to accepting the fact that there is no such thing, as an amateur league. There's no such shortcuts, and you need to be sort of multidimensional in approaching things as well. And one thing I'd like to discuss here as well, to just bring in a few of the materials. Two sources I'd like to present you guys is the Instagram, the Axia Instagram, and the blog, because I feel like there's so much really nuanced ideas floating around there, and I really want to sort of tie them together in one stream to sort of like connect the dots, as it were, in one stream. And one of the recent posts actually on Instagram, I'll just facilitate up to you guys. I'll just show here. It's this very simple principle on just understanding the market auction. Okay, again, for those watching, the market auction isn't that shouldn't be that surprising, and if it is, that's one thing to sink your teeth into. But just here, just the nuance of how Brannigan describes the market auction here. If you guys can go on the most recent posts. Just you can see how it just summarizes like a decade of experiences with simple clarity. And this is what I like to promote about knowledge at its first principles. Okay, because basically you can boil down every trading style, strategy, or method that can be built up from understanding the auction process, which is critical. And even we can even go as far to say that for those who are really enterprising, this paragraph here is literally all you need. This understanding market auction might be literally all you need to build up an entire trading strategy all by yourself. And then you can derive second order strategies from this first principles of understanding the market auction. And this, I think, ties in very nicely too. One of the blogs here, which I really enjoy, I really liked to read once again, was written by JK, one of the traders in the Poland office, and contributes to a lot of the blog. And I see already Stephen is talking about one of Joe's blogs as well from 2 weeks ago, and I'll go into that. But just to start off with, because just so we can tie it in coherently, and I'll post this into the chat right now for you guys to have a read through. But I'll discuss it from my point of view as well. Hopefully it seems to have gone through. I really want to highlight something here. This is just here. So let's really discuss this. And I sort of touched upon this. We all touched upon the same kind of idea at different points. Imagine you forgot literally everything you know about trading, just your blank sheet of paper. You just forget it all. Okay, everything you've learned up to the past few years. Just imagine you've just forgotten it all. Okay, that you've never seen anything on trading, you never read a book on it or anything educational, and then you wouldn't have certain perceptions, habits, or assumptions about the world. Okay. And then we go about a certain metaphor of, let's say you've never seen a game of chess, you never had any education about what chess is, but it's your objective to understand how to play chess. And then just think to yourself, if you had no input to understanding chess, how would you go about figure it out? How would you approach this? How would you think about understanding your own learning to approaching chess? Okay, what's the process of learning the chess? And on the flip side, then of course, is how would you understand? How would this translate to trading? How would you go about learning trading from that perspective? If you are completely new and you'll never have any input whatsoever from anyone in approaching trading, okay? And basically, this is the one thing I really want to introduce, this concept of one of the big things when you graduate from thinking very one-dimensionally, give me a certain strategy, give me something to work, give me like just, something to grapple with, like a strategy or mentality. You got to boil it down to even more, to just saying what's the fundamental building blocks of markets, and then being confident, and this is key, being confident to work from that completely by yourself and relying just on yourself to do it, if nothing else. Okay. And obviously there's a lot more to it, because then we can discuss, how it's vital to have a learning community and, being on the trading floor and all that, because that's your sort of your horizontal learning. Okay. But just boiling it down, because just to have that inner self-confidence that you can take the first principles approach, and then you're learning completely by yourself in understanding various things, understanding price action, understanding the ladder, understanding market fundamentals and everything. And it's that digestion is when you partly graduate from being one-dimensional to multi-dimensional in understanding, this kind of thing. And, and we sort of talk about this kind of idea on the floor. And I think one of the things I keep saying to the guys, they ask me how should I learn or debrief? It's sort of like, my metaphor is this. Imagine you are sent to an alien world, okay, just a random alien world that no human has gone to before. And your objective there is to catalog all the sort of the wildlife and all the alien sort of species that you encounter. Okay, there's no book on it, there's no resource on it, there's no video on it, there's nothing. You're the first guy there, and it's your job to learn how the entire ecosystem of the alien ecosystem works. Okay, and then you ask yourself, how am I going to best document it? How am I going to best put it down in words, so when other people learn from me, I'm going to then teach them best, the follow-up, if that makes sense. And how would you go about doing it? Because you've got to have the confidence in your approach in doing that, okay? And you have no point of reference. This is what I'm trying to get. So it's understanding, the multidimensionality here is going on the fact that how would you, with no point of reference, go about yourself in building this kind of approach, okay? From the first principles. So you could describe it as, our chess metaphor, or our alien world metaphor, okay? And obviously linking it to this post here of just thinking sort of in first principles. And really sort of digesting that, okay? And this is the thing. Then you notice how your questions change, how you approach things, how you think about things. And this is where you start to climb the scale of, you know, when you ask questions, you know, to myself or other people who've sort of, you know, had the experience of dealing with more traders, is you can tell that there's a different, they've made the mental shift in sort of approaching things. And that's really one of the key things, like in understanding the long game in your trading career, as it were. Okay, and this is where I'm going to link to something here. So all of these ideas are basically interrelated. Okay, they're not gonna, they're not separate. And I'm going to bring forward this sort of this alien world idea down to this one here. And this is something you can do like literally like 10 streams on, because it's so complicated. There's like, you know, entire field devoted to this. But one thing I want to talk about is understanding the difference between complexity and complicated, okay? And this is one thing I really like to talk to the guys about. And of course, one of the other blogs, which I'm gonna, again, I think I brought this up in a lot of the other streams, but I'm just gonna, you know, as someone, you know, I've written this obviously myself, but I just want to sort of discuss it again in this perspective of the idea of complexity and inductive thinking. Okay, so just to scroll through. This is one interesting thing again. This is here one-dimensional thinking. By picking up this tool, I have edge. And obviously when I talk about in this article, this tool, I'm referencing the footprint. Because, you know, we get a lot of questions on the footprint, and it's fair enough. I mean, it's nothing wrong with thinking about it this way. You've just got to understand that that it's not perhaps, you know, you can't go through trading thinking like this, basically. Because basically this trader is going to doom his trading into thinking like he has a certain idea about markets. Okay, you come into the market with a certain idea. This is what I mean about you not being a blank sheet of paper. You have a certain idea picked up from somewhere, a book, wherever, and then you generate an idea about markets. Okay, and then you have that filter of saying, okay, I have an idea. And then from that, I'm just going to pick out a trading tool at random. And then I'm going to observe the market with my idea lens and my trading tool. And that will ultimately give me edge. And that will give me edge, okay? And that trading tool organizes market data in a specific way to be traded as what you would assume as the assumed edge, okay? And as I said, that's, so I'm going to jump around because, you know, obviously I've written this, so I'm just going to, I've already explained. And basically what these people are trying to think is that they'll use the footprint charts to show you the edge, because that sort of confers what you picked up as an idea as the markets, okay? But basically if we dig a bit deeper, this one-dimensional thinking is basically deductive reasoning, okay? When we talk about the deductive versus inductive reasoning. And just to summarize it, because we don't want to spend the whole stream on it, but basically deductive reasoning means that you bring an idea or theory first, which all your observations are going to be filtered through under the idea umbrella, okay? And again, the reason why deductive reasoning is so strong and perhaps being a bit more one-dimensional is, guys, you know, it's not a surprise, is that a lot of education programs us to think this way. A lot of the sciences, a lot of research, a lot of academia, good or bad, or even games like chess, okay, they have to feature a lot of the time until you get to the very extremes, like fringe of a certain domain. A lot of it does feature complete and transparent information. So fixed and true information, you know, is of great use, which you can use deductive reasoning to figure things out, to predict an outcome of virtual certainty, okay, which is basically a binary conclusion, a yes or no, 1 or 0, okay. But this is where we're going to talk about the sort of the elusive nature of trading, and how basically trading is this, you know, it's no secret to anyone who's been trading for 5 minutes, is that you have shifting probabilities. You never have complete information. This is why I keep banging on about in my previous stream, the idea of adverse selection. you'll never really know why a trade is you're on side or off side in a trade, but just knowing that well enough, if you know 80% of the reason why, that's usually good enough. Okay. And then you have something called emergent behavior, which I'll come back to, which makes trading a qualitative business. And that brings us to the fact that using deductive reasoning in this kind of domain, like trading, is the wrong sort of area to be in. And this is where we're going to enter using something called, I don't know if some people might be familiar with this, and I think this is a Welsh word. So if there's anyone Welsh, please correct me. But I think it's the Cynefin framework or something like this. So again, if anyone knows a bit of Welsh, please correct me. But this is what I'm gonna. If I just move this back, this is what this is here. So this is a very interesting framework to identify what kind of state or what kind of world you're operating in, okay? Because what we're basically understanding is that this is law of the sciences, okay? What that basically means is that you have something that's complicated, but it's solvable. It will give you a fixed outcome at the end. It's hard to compute it, but it's solvable, and that'll be true forever, okay? But the fundamental mistake a lot of people come in, and again, if you have a rigorous training in a lot of the computer science, programming, mathematics, engineering, whatever, and again, so much of the trading industry is focused on quantitative, trading, investing, whatever. The entire approach is this, okay, something that is solvable, okay, and you can see this in how a lot of people try and short circuit the learning process in trading by trying to approach it through so much like quantitative understanding without really understanding the street fighting tactics, the street knowledge that comes with trading. It's sort of like too refined, too academic. And why is that? Because trading, like much of, shall we say, like I'll bring in examples, but trading embodies this domain here, the complex domain, okay, which is non-linear, sometimes non-rational, where it's very hard to break down the world in its separate parts, because when you add up those parts, the sum of those parts give you a completely different result. And that's what we can determine as, if I just change colors here, without going too much into it, that's what we call emergence, okay? When you combine certain things together and a different behavior emerges. Okay, so if you were to track one ant, if you were to break down an ant colony and say, I'm going to understand this ant colony by trying to predict mathematically the biomechanics of how this ant is moving, because you've broken it down to its parts, okay, that's cool. You might figure out how that singular ant is behaving. But then if you put that ant together into a whole hive, into an ant colony, that ant is going to behave completely different beyond to what you just predicted. And that's because you've aggregated so many ants to the point where they form an ant colony, behave completely different, and their behavior, their emergence has shifted completely. Okay, and that's the trading world you're operating in. And to be honest, again, if anyone's, let me just bring this back to just so you can see. I think I've lost this. Where is it gone? Here we go. So this is what I'm trying to say, that the complicated domain, okay, is computable, binary, right or wrong, and it's linear, okay? The complex domain is non-linear, emergent, and yes, it is temporarily resolvable. You can figure things out for a while, okay? But you'll figure that out with a lot of trial and error, okay? But it's never fully solved. And this is why, as everyone says, this is where we can, these are the gems of wisdom you'll always find the traders in books. True. People will tell you, you're only as good as your last trade. You're only, you shouldn't rest on your laurels because, the second you think you figured out the market, it will destroy you. And this is why this is the thing. This is why this is a concept in trading, because we're operating in the complex domain, not in the complicated domain. And this is the whole theory about complexity. And anyone that's sort of read, Nassim Taleb books or anything, you'll be very familiar, because he introduces that really brilliantly. And that's, how I first came across this whole concept and sort of dug into it a bit deeper. And this is the point that the article tries to make. We figured that out with a lot of pain and a lot of suffering because, without, we incur a large cost of time and capital. And the way you have to approach the complex domain is the complete opposite of having a deductive mentality. You need to be thinking inductively, which is where you have to deal with pure observation first. You have to be a blank slate constantly because of that emergence quality, where if you aggregate so many things, the thing you're observing completely shifts into something unpredictable, okay? And this is why you can't have a supposed theory and then filter out the information based how it fits your theory. You have to come up with a pure observation first, okay? And this is where, thank you, Vladimir, for that compliment as well. Okay, not to get sidetracked, but this is this is where I mentioned that if you have to have the mentality of having a pure observation first, and of course just bringing it back to this, what we mentioned from JK's article about the chess analogy and the alien world analogy. You have to go in there with no assumptions. Everything you've learned before about the ecology on Earth may be completely and utterly different in an alien world. And that's why you have to come in with pure observation and just try and figure things out probabilistically. Okay, I just butchered that word. From a probability mindset. Okay, I can't pronounce the word now. I'm going at 110 miles an hour now. I'm trying to keep up. But you guys know what I mean. So this is where, you have to come to pure observation first. And just very blank slate, what are just the obvious first principle patterns? And from there, draw a sort of hypothesis and draw a why theory occurs. Okay, so, no pre-established lens. And then, and what we have to assume is that by using our deductive mind, you have to say that you have one outcome, but with inductive, okay, it gives you the fact that you have a whole stack of different outcomes. Okay, a whole stack of different outcomes. You have a wide range of outcomes, and it's always going to be open-ended. Okay, there's no binary outcome. There's just, you have to rank things higher by probability or not. Okay, and of course, bringing probability to trading is not a new concept. If I'm going to tell you guys, oh guys, yeah, you've got to consider probability in your trade, I mean, that's not going to blow your mind. That's nothing new. Okay, but it's just there's just this concept that we all understand, but it's not fully digested, in my opinion, for those who haven't gone from being one-dimensional to multi-dimensional. Okay, and this is what I mean about the sort of the top-down or bottom-up approach, is that you have to have this as a trader, this constant reevaluation mentality of what, because we're dealing in this complex domain. And then, I talked a bit about emergent behavior here, so I won't really dig into it. But basically what this means is, because we have emergent behavior, we have a market that constantly shifts the rules of the game, okay? The nature of how the markets are, liquidity, nature, states, and everything, they change, and you have to adapt with it. This is why there is no such thing as one strategy where, I can give you one strategy, may work for a while, and then it doesn't. You have to think of first principles, and you have to be confident in doing that yourself, in discussing it with other traders, in knowing how they're thinking about it, and so on. And this is where you have, that vertical and that horizontal learning. And as I mentioned, some of you may not be too unfamiliar with this, because a lot of any environment that deals with incomplete information, probabilities, anything like war and conflict, you should be familiar with this. And this is where we can kind of go into, if we try and learn from those who have skin in the game, for example, like fighter pilots during wartime, okay, they deal with this issue. And I'm sure some of you, because, this sort of OODA loop, or, this concept from John Boyd, Colonel, this has been making the rounds. It's quite a popular theory on the internet. So, but if we tie it back to trading, okay, it's his attempt. It's an attempt by the US Air Force, an attempt by people with skin in the game, dealing with imperfect information, having to deal with complexity of how they adapt to it. And it's fundamentally, if you think about it, an inductive approach, okay? And to summarize it, of course, yeah, if you guys read the article, I've linked it here, really good resource. But basically what this means is, or at least the way I've seen it, unless someone's here a fighter pilot, then that'll be an insane conversation. So if someone is, please, we should have a chat, and hopefully we'll have a great interview about it, or something like fighter pilot training and trading or something. But again, what I got from it is the fact that basically this fighter pilot is in always pure observation mode, okay, where he's constantly weighing new information from a probability mindset to understand the developing patterns, okay. And that's the sort of the shift you have to go from thinking deductively to inductively, okay. And this is where I go on from, okay, just to bring it back to trading very specifically, is this footprint concept where in another article where I talk about, how do you build your Sierra chart footprint and so on, basically I say that when you're thinking about even building your tools and how you think about your tools, you should think about it first of, you observe the market, you're a blank slate, okay, you're there, naturally using the power of your brain and deduction ability as a human being, because you're not a machine, you're human, and that is a huge advantage, even though people love to sell you on the fact that machine learning is all the rage, quants are all the rage, or whatever, traders are done because AI is here. That's just the sales guys talking to you. Use the power, use the advantage you have as a human being and the power of your brain to just rely on it to say, individually, as a human, I'm going to pick up things which many people probably haven't picked up before, just by sitting there and observing. And from there, you can draw out valuable ideas based on what's happening, okay? You haven't broken down trading to these very neat little boxes. You just said, there's an observation. I don't understand 100% why it happens, but I don't actually need to understand 100% why it happens. But I can give it some kind of reasoning. And from there, I can attach probability to form an idea. And from there, using the example of the footprint, I can build a footprint around to exploit that observation, and therefore that drives the edge, okay? And that is the complete opposite, where you come in with an idea about markets, okay? And then you say, I'm going to choose a trading tool to fit that idea and that observation, that edge, okay? And then just to not spend too much time on this, and I pick up one thing everyone uses, like when they Google, anytime someone's introduced to footprint charts, they might say, finished auctions at the high, cool, I'm going to look out now, and every time I see a finished auction, I'm going to trade that and whatever. But that's bringing a concept that you haven't boiled down to its first principles. You haven't observed that in its natural state. And then that leads to a lot of, you see it, whatever, and then because you have this deductive mentality, then you just say, oh, I had a negative outcome, i.e. no edge. So the tools, this theory about, finished auctions at reversals on the footprints must be wrong. I couldn't make it work. And so the tool, the trading tool, the footprint doesn't work. So this idea about markets is also incorrect. Okay? And you've just done yourself a disservice by removing such a powerful tool from your arsenal. Again, something we lean on a lot at Axia, the footprint. A lot of the training is geared around the footprint because you're approaching it deductively from a complicated domain, from thinking about it like, binary, to just understanding that if you approach it from the bottom up, from thinking, inductively from a complex domain, then that makes all the difference. Okay, so I just wanted to tie in. Of course, I really recommend that you guys, really read through this. But that's what I sort of meant, throughout this whole article. It's been a while since I've written this, so hopefully I've fleshed it out properly. But that's the sort of the driving point here. Okay, so I see there's a few questions here, guys. So yeah, and as Stephen said, thank you. Yeah, exactly. A recent tweet by Alex, one of the co-founders at Axia. Yes. At Axia, we firmly believe the power of investing in the architectural brilliance of the human discretionary machine. Exactly, and that is your edge. And I'm sick and tired. All of us are sick and tired of people who try and absolve responsibility of just saying, algos, quants, and everything, that's the way forward, and then just completely not going. That's also, in a way, one-dimensional thinking. If you've been a trader for 15 years as a discretionary trader, and then you try and systemize what you've been doing, that's a whole different thing. If you're someone who's been new to trading, you've pulled up your Robinhood app for 5 minutes, and then all of a sudden you love trading, and then someone tells you, oh, you can't be a trader these days, you gotta be a quant, and then say, yeah, quants are all the rage. And then you beat to the drum of being a quant trader, then you're doing yourself a massive disservice. Like, who are you to say that that's how trading should be? You've been in the game for 5 minutes. You're already taking the idea of the gospel from someone and saying that you're attaching your identity to yourself, rather than saying, hang on a minute, why don't I just, in my own, using the own sort of the power of my brain, not thinking about anyone else for now, because you should be digesting what other people tell you later down the line. But for now, I'm going to be a blank sheet of paper, and I'm just going to observe, and I'll just see what I see. And that's where we're going with that, okay? So and that's one step. Like, when people shift again from thinking from the complicated to the complex domain, you're making one step further from being one-dimensional to multi-dimensional, okay? And thinking about things from sort of the first principles. Okay, so I'll take a bit of a pit stop. So if you guys have any questions on that, I know I got a bit philosophical on that, but I think sometimes even thinking about things a bit more philosophically in that sense helps to digest a lot of the sort of the background and the thinking to what you're doing sort of day to day, to sort of give it more validity. So I'll just take a bit of a... So I see Alex there. Another Alex in the chat says, this has been the hardest shift for him, coming from a background in economics and fundamental analysis. And you want things to make sense to rational markets. Yeah, it's interesting. Again, it's interesting because, and obviously it's funny because, economics and fundamentals, we're dealing with markets, and then, as traders, again, we're dealing with markets, and sort of how academia is forcing you so hard down the complicated route through, through mathematical proofs, through algebra, through systematizing everything, the rise of the quant in the past 15 years. And it's sort of, and it's funny because, correct me if I'm wrong, but anytime you go back to look at economics, go back to what was written in economics 10 years ago, 20 years ago, 25 years ago, 30 years ago, 100 years ago, you'll notice that it becomes less and less mathematical and more philosophical. And it just as a side rant, how certain, every single academic domain, regardless of how mathematical and how deeply they should be, they try and sort of legitimize themselves by trying to make everything like rigorous through mathematics or so on, by trying to transfer everything from the complex domain to the complicated domain. I guess just because it just sounds better. It's easier to sell people like, hey, this is hard. Pay up $200K a year and you're going to learn how to do all these fancy equations, and then it looks good on your CV. I don't know. I mean, there's a lot to it. You guys probably know where I'm getting at, but there we go. So understand that this whole, don't blame yourself if you're in this, because everyone starts out at this point. I'm just saying, by the fact that you're going to start thinking like understand that this is a thing, and that perhaps you might be trapped thinking too much like this and thinking more like this is another step forward, and so on. Okay, so if I just so I see a question from Undefined. That's looking at a couple of factors before entering a trade instead of only one. Avoid us being binary in trading. Now I've got to think of how to answer this, because if this was asked on a different stream, I'll give it a short answer. But now, do I give it the long answer or the short answer? I don't know. But there's a lot to get through in the stream. Let's see how we're doing for time. Okay, it's like time's gone by quite quickly. So it's not the fact that undefined to your question. It's not the fact that you should be looking at a couple of factors or just one. In fact, what you'll sometimes see is the fact that some people trade very dogmatically looking for one thing, which might be rare, or some people have a multitude of things they're looking for in certain trades. So what I've just done is I've given you two contradictions to deal with, right? And then you're thinking, well, okay, hang on, he's just trying to slip out of the question. But again, this is kind of thinking about the fact that it makes sense if you're building the reason for being in that trade from first principles, from the idea first. Like, what's the idea? What does it require? What is the observation you're trying to exploit? What's the observation that you've noticed, which you have formalized in an idea, which you're then trying to exploit the idea using a trade? Okay. And with that process, it should tell you whether you should be confident enough in looking at a couple of factors or just one factor, if that makes sense. So I probably gave him the philosophical answer on it. I don't want to get too waffly, but I just want to frame it in the context of what we're doing on the stream here, to make it a bit more nuanced. So again, basically what I've just said to you is it depends, but I don't want to sort of say it depends and get out of it. I'm just saying it depends, because if you really think back, if you just dig back all the reasons why you're getting into the trade, not even like, oh, the market's broken through this level, so I'm gonna da-da-da. It's like, why are you even trading breakouts? Okay, I'm trading breakouts because the market has a propensity to expand ranges in certain periods. Okay, why does the market do that? Why does the auction, and when you break it down, it seems to make you more multidimensional. And when you understand that principle of, okay, the market naturally expands ranges. Okay, what does that mean? And then that's when you can start building this more multidimensional thing of, okay, well then, in certain states I can look at this and that. And, again, I don't know what period to stop talking about it so we can get on to other things, but hopefully that makes sense to you, undefined. Oh, I see you're replying. Okay, cool. That's that's great. Yeah, so as Alex said, sometimes you need one factor or indicator, sometimes you need several. Yeah, so there we go. Okay, so so one thing I'd like to bring in is, if we now fully understand this one-dimensional to multi-dimensionality, the chess analogy, the alien world, the first principles, the alien world metaphor, the first principles, understanding that it's so easy to approach this because of our upbringing, approaching trading in the complicated domain instead of the complex domain. All of this should make more sense here in driving at the main point of the stream, which is understanding the trading process, understanding how you're moving in your trading career versus the outcome, the P&L. Okay, and again, you'll go on Twitter right now and you can bet that there's going to be 5 different people talking about the process is very important in trading. Don't look at your P&L, it's not a determinant. So what I'm going to tell you now, everyone's going to be like, yeah, I know, that's cool. It's nothing. But I really feel there's a lot of nuance that's lost, especially if we approach it from this perspective here, okay? Being, of what we just talked about. So we're not going to go about me saying, everyone understands, yeah, cool, I've got to think about process and, I've got to versus outcome. But let's talk about more like personal experience, okay? And more like things learned from the street fighting rather than just thinking about it philosophically. I will tell you right now, learned it with my own skin in the game, with my own pain, and me wishing so much to go back in time and to relearn and to reapproach in how I'm trading. Do not underestimate how a disservice you're doing to your trading if you go live too early, you put real money on the table too early, and you short circuit your learning process, your observation process too early in the game, and then that does you a world of disservice. Okay, and this is me sending a love letter to myself. I wish I could, 3 years ago, 4 years ago, and this is me also talking to some of the new guys on the floor, perhaps some of the guys, older guys or someone. Okay, do not underestimate what horse blinders you will wear when you start trading with pressure too early. Okay, you might think you can handle it, but you can't. If you think you're handling it fine, talk to yourself again in 6 months, in a year from now. Do not underestimate the time it will take to really sit in this process here of being so fluid, so relaxed, in this perpetual state of being relaxed, and you can observe and just be so unemotional and just observe first principles. You're going in a place where no one is really spending time. Everyone wants to just slap on a moving average, whip out their Robinhood or CFD trading account and start like hitting trades and, you know, whatever, like let's get the show on the road. Nothing is worse to your trading career in doing that. And then just spending, and no one is spending time and just saying, I'm just going to sit here, I'm going to observe. This will take time. I'm in an alien world in which I do not understand. There's nothing in trading I can learn from school, I can learn from university to prepare me for this alien world in which I've now just randomly landed on. And just like in real life, like, you know, rules of the jungle, whatever, you will get killed. Okay? There's no amateur league in this. You're in an alien world in which you have to learn to survive. And you have to use your power of observation to sit there and really digest and think about it. Okay? And then what I've just said to you, rather emotionally maybe, is me just wishing I could have had this conversation with myself a year ago, 2 years ago, 3 years ago, 4 years ago, 5 years ago, and so on. Okay? And perhaps, hopefully, I'll help someone here in the stream really taking the time. And to just drive the point home, for some of you follow the Axia Instagram a bit. And of course, if you followed the streams as well, you might recognize someone here, Isaac. Someone who sat next to me for a long, long time. We sit next to each other, and we have done until just recently. So him as a junior trader, okay, knowing nothing about, well, of course, he did know about trading, whatever, but from the way we approach it, this multi-dimensionality in which you approach it at Axia, using different tools and different mentality of approaching it. He spent 16 months on the sim. Okay, 16 months. Okay, there's a difference between, of course, before of just being, you hear stories about people saying, yeah, I was on sim for 2 years and I can't bring myself to open a live trading account. Okay, that's a bit different. But it's 16 months of pure observation, of just unrelentless debriefing, digestion, thinking about it, really just soaking it all in. Okay. Again, foregoing, you know, immediate rewards, you know, just hitting like, oh, thinking, you know, I'm just going to get in, whatever. And you can really see how it's his progression now, once he's gone live, and he's been live ever since. He hasn't flip-flopped back and forth. He's gone live and he's been ever since, of how he's progressed versus someone who's been short-circuiting and says, you know, I've learned, you know, I read something cool. Yeah, moving average, cool. I get it. I'm going to buy here every time this thing, you know, the price touches the moving average. Time to go live, you know, and everything. And, you know, I see 2 comments about starting small is very important. You know, blowing up a few accounts, cool. And what we're driving at is skin in the game. And I very, very, very much agree with you guys. That is the next step, having that skin in the game and learning, you know, to be out in the streets, you know, to get in the fights, to figure it out. That's vital. But I think the conversation's now shifted in a lot of this, in a lot of trading, where that has been so promoted, having skin in the game to learn, that people jump in so early, myself included, to just not sitting comfortably, sitting here all day, every day, 16 months, pure observation, pure inductive thinking, and really, really understanding it deep to its fundamental, like, first principles. Okay. And yeah, and that's what it means. And again, something else, and this is what I mean by, I'm trying to tie up a lot of ideas that you can see on a lot of social media to sort of put it into like one little, you know, into a theme. Something we see, you know, with a lot of new traders. Okay. Your ability to soak in and learn effectively is at its best when it's aligned with, you know, direct learning goals. When your mind is distracted, this is what I meant by the horse blinders, with live trading and performance too early, is when you get trapped yourself into an aggressive race to the bottom. And don't short circuit this foundational learning experience. And as Alex says here in the tweet, you know, it's because most people want the performance goals first before they have learning goals. And this is the kind of thing, as you can see in the title, have you considered this in your trading career? Have you considered what your learning goals are, not your performance goals? Okay, your performance goals, cool. It is to get a trading career, is to make a lot of money, is to have an edge, is to be the best you can be. That is amazing. That is the reason why I get involved in trading. But that's sort of like, that will come later in the performance goals. Think more if you're early in your, even if you haven't, and when I say early, I don't even mean like you've been in it for 5 years and you're not consistently profitable yet. You can be in it 10 years and you're not consistently profitable. What I mean by early is still not being consistently profitable. It's still being a novice, okay? It's like you've been in the gym 10 years, but you still can't squat 150 kilograms, okay? Whereas someone who knows how to train properly can learn how to squat 150 kilograms in like a few months. And that guy is way ahead of the curve than you are. And that's what I mean about storing in that place. So reconsider, what are your learning goals now, if not consistently profitable, versus your performance goals? And do not underestimate the importance of just being lucid mind, not in trades, just really just sitting there and just thinking from first principles and and so on. So let's give something more tangent. Okay, again, this was March. This is early March. So I think obviously this is relating to something FOMC related. Of how well have you debriefed? How well have you thought about something? And this is, again, a lot of the stuff we introduce in the 6-week flagship training course is a lot of valuable stuff. Is information of how you should think about things, but it is debrief, learning, journaling. We introduce all that, and then way more as you become an Axia trader. That is one of the big things. So don't say, okay, I do journaling, and all you do is put your entry and exits. Sit back, not trading it, and think, okay, what comment caused what? Why did the equities behave this way? Why did the dollar, how did the dollar affect bonds? Did they affect bonds? Which one's leading, which one's not? Is it perhaps a coincidence? What was the order flow looking at that day? What was, and so on, what market correlations and so on. And as you can see here, that is only the starting point. This is where you're thinking first principles, you're in an alien world, and you got to tie all these, how do you do it? This is what you should be thinking about in terms of learning goals, okay? And this is what we can sort of build upon to process versus outcome. And if I now introduce one other blog, again, I introduced it, on the other streams. I'll put it again because I think it was extremely powerful. From one of the junior traders, so I guess he's not so junior now. As some of you might know, Joe from a lot of the older streams, who has really, really, powerfully progressed in the past few years in terms of his career. So this is from someone who's speaking from, a lot of skin in the game, a lot of lessons learned. And he's, he basically talks about in this article, how does our understanding of success and failure impact the learning curve, okay? And he talks about how your perceptions of success, in this case, he has been wildly, very, very successful, really pushed the, that limit. And how even when you go from learning goals to performance goals, and he's very much in the performance side of things now, okay? Of how your learning is still so warped in a bad point of, in a negative way. You might be thinking you're actually learning, but you're not. And how that leads to problems down the line. Okay, so what I just said there, I'll leave you guys to really read it, because I feel like that'll be way more powerful if you just read it through his own words. I don't want to do a disservice and butcher the message he says, and so I really hope you guys read it. But one thing I'd really like to introduce is this graphic here, which I'll bring into this side here, the non-linearity of performance. And this is what we can introduce about in terms of process versus outcome, is your learning curve versus your P&L curve. And as you all know, if you judge your P&L too early as a trader, then this is when you start getting, and really guys, again, one big thing I see all the time in trading, if you're one of those people who start trading live too early, one of the big telling signs is that they resort to psychology books way, 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 way too early. And I know this will sound weird because people are like, oh yeah, trading and psychology, those two areas love each other. Every new trader loves to talk about, they've been trading for 5 minutes. Oh, it's my psychology. Oh, it's this and that. Not to diminish, but and that is extremely important when you have to perform. Okay. at an extremely high level. But as of my honest opinion and observations through my own skin in the game, me trying to tell myself this many years ago, seeing other guys of various skill levels, people focus too much on psychology way too early in the game, and it's because they're trapped here. Okay, they're looking at the P&L. They've been learning for a while. They're looking at the P&L and they're thinking, oh, I know it's the gulf of emotions. Oh, I'm not making progress. Whatever. It's definitely my psychology. And people tell you, and unfortunately, guys, it's not just psychology. It's your lack of edge. Simple as that. Okay, and it's hard to swallow because you've been doing the hard work of doing this, and for someone to say you don't have edge, there is no edge in what you're doing. That's hard. So then you just replace it with books. You replace it with psychology. You replace it with whatever. But that's because you're thinking too much in the performance mindset. Okay? You're not thinking about the learning mindset. You're not thinking of your learning goals. What are your learning goals? Okay. If you're in that learning goals and so on, it should be very aware to you that I'm happy to sit here. This is amazing. I'm soaking and learning so many things. I don't care about P&L because it's irrelevant. And you have this open mind where you're just soaking in things and you accept that you don't have edge, and that's okay. That's okay, because this is why you're in this learning zone where you have to build into it. And then as you go along, it becomes apparent, and then someone who's, how do you know if you have edge? Great question, and I'm gonna literally come back. I'm literally gonna say that in the next few minutes. And as you slowly move to your sort of you from your learning goals into sort of more performance goals, you will sort of you'll be able to tell. So actually, Falcon, interesting question. So funnily enough, you could probably tell if someone has edge faster than you can tell yourself. And it's easy because when you're on a trading floor, you deal with guys, you know them so intimately because you're there 24/7, you know they're trading really well. Just from the questions, from the things they talk about, from the questions they ask you, the conversations you have, you know that they have edge versus not having edge. And this is what I alluded to in the beginning. Do you think one-dimensionally? Do you think multi-dimensionally? How close is that guy to just having edge? Okay. And it's also from the fact that, relating to something about confidence, it's kind of like you have to be willing to trust yourself when you go from being one-dimensional to multi-dimensional. You've been thinking about it, you've been observing and sim 16 months, you have this amazing process and everything. It's kind of like, it's kind of like, your game is so strong, so tight. And then it's like, you can take it, you've gone through, let me just see if I can find it. Okay. Whereas okay, sorry, just reuse from earlier. It is this. When you've gone from learning goals to observing something, yourself using the power of your own initiative, your own smarts, you've built your observation into a trading idea, which is your own, then developed it into a concise trading approach, method, strategy, whatever you want to call it. Even from there, as you transition from that learning perspective into the performance, probably there you don't have consistent edge, but you're a billion percent further along the curve than everyone else who's been stuck in this performing after they've been trading for 5 minutes. And they're stuck reading psychology books. Okay, and I really, really don't want you guys to think I'm sort of hating on psychology books. They're amazing. There's super valuable stuff, but it's completely at the wrong time. And again, to talk about things at the right time and at the wrong time is one other thing I want to show you guys here. Is this article, again, written it quite a while ago, so I probably redigested this article differently from when I first wrote it. But again, this is me writing it from my own pain. Okay, so I use the example of Olympic weightlifting here. So if you read the article, you get the metaphor. I don't want to spend too long on the metaphor. But what this basically is it's easy when you have the performance mindset to suffer from something called the outsider looking in problem. Okay, when you're an outsider, you look at it, you look at things naively. When you're a new trader, you look at things naively. Okay, and this was my when I really think back early on, I was looking to what a lot of the senior guys were doing. Okay, and I was trying to emulate too much what the senior guys were doing, and I was thinking that's the best way to do it. And there's the perfect, I mean, if you really want to learn edge, that is exactly what you should do. But you should be very aware of where to place that kind of learning. And this is, again, this concept where we talk about vertical learning and horizontal learning. So if I talk about that for a second, vertical learning is where you learn from someone who's been trading 15 years, 20 years, 25 years. And the amount of edge and nuance they can give you is unparalleled. And again, the power of the trading floor, like at Axia and other places, because they're so collaborative, that is, ridiculous opportunity to learn. But do not underestimate the opportunity of horizontal learning, as in the guy in the trenches who's suffering with you as well. He's been trading for 2 years. He's trying to learn things out. And yourself. Don't forget the intuitive power of yourself in learning just by trusting yourself. Okay. And what I'm trying to get at in the article is, I was trying to mimic what a lot of the top, in this case, what a lot of the top lifters were doing at this moment, and you try and mimic them, and that's assuming that the top, these top Olympic weightlifters who have a 15-year career, you're assuming that how they're training now is exactly how they trained back when they were kids. And for you to lift like them, you've got to be lifting like that now. Okay, which it doesn't work that way, because when they were kids, they were training completely different. Okay, completely different. And using this analogy, it's the same thing. How the certain trades, some of the senior guys, how they approach things, they were doing things completely different when they first started, mentality and a learning point of view. So it's easy sometimes to just to look at it from that perspective, the outsider looking in, naively as a new trader. And then start thinking, you got to copy it. And yes, you should really digest what they do, but you should really be thinking, do not underestimate that, there is a difference from how they got from year 2 in their career to year 20 is not what they're doing now. There's an evolution. They've gone into the performance world, but you have to be stuck in the learning world, in the observation mode, if that makes sense as well. Okay, so I just wanted to bring that in as well. I think that hopefully that'll be valuable for someone. And this is why, of course, the article, if I go all the way about it, is, a trader's education, the right system at the right time, in understanding when is the right time to approach these. And because most people, to just drive the point home, is that you completely invert this. You try and focus too much on the P&L curve because you go too early trying to trade live, and it's always longer than you would think, always. But there's nothing, obviously there's this phrase, I'm sure you guys know it, like slow is fast, or I don't know, I completely messed it up now. But purposeful is slow is fast, or so on. Basically meaning you think you're trying to just, steamroll ahead and you're doing it fast. And then you spin your wheels for 2-3 years, when in fact, if you took your time, you're on the sim for 16 months, you're really digesting everything, you'll be live and really, cooking with gas and really progressing way faster than you just spinning your wheels for 2-3 years, because you're just too absorbed, in this state. And, you're wasting your time saying, oh yeah, it's my psychology, got to fix it. But then, you fail to realize what's been staring you. Perhaps you don't have an edge, perhaps you're short-circuiting, yourself because you're just not trusting yourself. There is, Stephen, thank you. I'm sure someone was saying it. Slow is smooth, slow is fast. And again, half of this stream is basically me just talking to myself 3-4 years ago. So it's kind of like an ode to myself, because I'm just, the things I wish I have known, and the pain I wish I could have. But again, maybe that's part of the process. That's just how it is. That's part of the learning curve. But, instead of your learning curve, short-circuiting your learning curve by going live too early and making your learning curve like this, and then never, it's just unmanageable. So that is that's something a bit more dear to my heart. Something I've been, talking to a lot of the guys, interestingly, of different, people who are new, people who are sort of, more junior, some more senior. And I really hope the point sort of came across in understanding, where you are in your trading, and if you've considered this for your trading career and so on. And Satoshi says that was his issue, live after 2 weeks, but trade small to be fair. And yes, Alex, so you're a big proponent of taking live trading off the table as we learn and progress, because this is where I am. I think I need to take a step back to move forward. Yes, 100%. And the time you will take in this learning mode of just pure unemotional, you come in just for the love of learning it, is longer than you might think, but always a lot faster than just spinning your wheels constantly for years, losing so much account size and just pointlessly doing that in every way. And you'll be, and actually, if some of you guys may not be convinced by this, I'll give you a challenge. Take maybe, where are we now in April? I think it is April 12th. If you feel like you've been spinning your wheels 2 months off for too long, take the month off, or maybe till the start of May. Do not trade. Don't even think about trading live. Start fresh. Boil down what you've learned from first principles. Really think about it deeply. What is the thing you intuitively understand? Okay. Do not throw away everything. And this is what I'm saying. It's funny how a lot of guys and this is me as well. It's so easy to have a lack of confidence in what you're doing and thinking, oh, I'm not good enough. I've learned it's crap. It's not good. There's a diamond. There's a gem in everything you've learned. Even the most stupid, moving average, whatever. There is some gold in there. But think about it multidimensionally. Think about it. What is the first principles? Why do people have a moving average? What was their thinking at the beginning? And rebuild, or think about the auction, think about profiles, and really get into the head of why people are using that as a trading tool. Boil it down to its first principles, and then just trust yourself to just build organically from there. Okay, and that is again inductive thinking. Inductive thinking. You're in an alien world. Learn it. First principles. You can only rely on yourself to learn it. Understanding that you're in a complex world, not a complicated world, and so on. So yeah, that is basically what I wish I was thinking about many years ago. But there you go. That's how it is. And I would like to also, so send me your questions in, guys, because I'm happy to now, wrap up and talk about it. Now, one big thing I would like, one last thing I like to tie off is, just because you're on sim. In fact, let me be clear. Do not even trade on sim. Don't even be in a position. The fact that you're in a trade on sim is enough to put the horse blinders on you. You'll be too distracted with the trade. You'll be thinking about the trade. You'll always be thinking slowly in the back of your mind, wow, this trade is really working. Wow, when I'm going to go live in this trade, I'm going to make like $1 million. Oh my God, and it's going to be so good. You're already short-circuiting the process. You're doing yourself a injustice, okay? Don't even trade sim. Just come in, break down your strategies, break down what you're looking at, think about what you're looking at, and just sit there every day. Just watch the markets, watch them. What is SPU doing? Treat it as some foreign animal you've never seen it before. Catalog it, think about it. Why does it behave? Look at the treasuries, what is the flow like? What is just all these different components, and just put them together and just sit there and just really, really deeply digest it. Because the second you will put on trades, you will not be thinking in that process. Okay, then slowly introduce sim trading at its bare bones, no pressure, whatever. And then when the time is right, you'll really, really, really feel it. You'll be bursting at the seams. You'll be like, I don't know, like every day you'll be shouting, please, I need to start, because then you'll have that confidence where you will just really have to put live money online because you know it's right. Trust yourself that you know when is the right time. Okay. Yeah, so there we go. So yeah, no, I see this, Vladimir, where you're saying about, controlled losses or purposefully losing money to learn. There's a time and a place for it, for having that kind of skin in the game, but it's way later than you would think. Okay, in my opinion, and that's my opinion forged out of my own experience, seeing with other guys, seeing the newer guys, seeing the older guys, talking to the guys. It's later than you would think. Okay. Satoshi, perfect. When I stopped over trading, waiting for specific setups, I'll trade once or twice, and then I'll notice things happening in the markets that I didn't notice before. Absolutely. And imagine the amount of things you'll notice just by not even being in trades, just sitting there and really thinking about it. Having the lucidity of the mind, just sit there and just soak it in. Okay. And then, just really thinking about the trading process and everything. Okay, so, and that is, one of the big edges that we, talk about on the floor, and, the trading course, and, what separates prop from retail, and the sort of the Axia culture of what we try and train the guys on the courses of having that ability to learn and think about it and debrief things properly, which, takes you a million miles ahead of, guys who are stuck in that sort of that wheel of pain and suffering, of just being live. They're not learning anything, they're not digesting, and you'll always be stuck in that seventh circle of hell, basically. Thomas, to your question, no, it's plainly just sit there and observe. That's all you're doing. You're just an observer. You're not even trading at them. It's like you're not even a trader. It's like you're just an observer. You're just there to catalog this weird, complex, strange world that constantly changes itself with weird emergence. You're just there to think about, and just pure observation first, I would say. Deck, I see your question about monthly and yearly return. That kind of stuff, I'll love to, answer that perhaps, with perhaps guys interviewing, we'll hopefully get a few more interviews on the stream as well with, the guys on the floor, and we'll talk about that. I just want to keep the questions a bit more specific to the stream. But what I'll do, guys, I'll quickly scroll through so I just make sure I don't skip out some of your questions. Okay, let me see. Okay, well, I think I hopefully answered some of those questions there, guys. So unless there's someone bursting at the seams, make sure you ask your question right now, because otherwise I will wrap it in a minute. But look, I really hope you guys have go through the links I sent in the chat, in the to the blogs. There's a lot of everyone who's written those blogs have skin in the game. Everyone who's written a blog there is on a different part of their trading journey. Everyone who's written that blog has banged their head against the wall so many times, and there's so much nuance to all those articles, and I feel like they don't get enough sort of airtime as they should. So I really, really hope you guys dig through it. And there's more articles than just that. So of course, feel free to look at it as much as possible. So one more time, I will just link just one of them here so you can see. And then obviously you guys will know how to navigate the rest of the website. And then we'll see. So I see a question here from C-Web. I could trust the process more. I could trust the process more if I had the right process. How do you know if you had the right process if the probabilities and the markets always change? So this is what I'll say. If you sat, it's funny how if you go from just observing and really learning and building and having that connection of observing, building an idea, and really thinking about it, digesting and seeing into a persistent, controllable edge, you will just naturally find that confidence. Believe me, you may not be thinking this is true, but that'll come a lot faster than not. And secondly, it is finding some kind of professional training, for example, like at Axia, of people who are dealing with a complex environment and can teach you this kind of stuff. And this is why, we introduce it so much in the 6-week career flagship program, and so much of our library of knowledge through, videos, public, not public, to people, who are alumni or non-alumni or on the floor or whatever, or remote traders, whatever, it's there. So seek out that kind of people who are thinking about this multidimensionality, this thinking we're not in a complicated world, we're in a complex world. So there we go. I see some requests on some stuff on some other streams, so I will screenshot all this, guys, in terms of some other questions, and hopefully I will tie them into future streams as well. So there we go. So again, I mentioned this before, but if you guys are interested in any of the things we talked about, thinking about trades, learning, tools, whatever, I highly suggest you follow elitetraderworkshop.com. The link is in the description. Really follow it, guys. We'll have one of the senior guys taking you through a whole workshop on that. It's great. So make sure you guys go on that if you haven't already. And I appreciate the love, Stephen, one of the most thought-provoking ones. Well, I said I wasn't feeling too confident about doing it, which is funny considering half the stream is on confidence. But it's also something I've been trying to just digest in my head, like all these little ideas. And again, one of the great things about doing the streams is just naturally when you're forced to explain something to someone, you just relearn it. It's like there's that quote, like when you teach or you explain, you learn it twice, or something like that. It's a quote from someone. I don't know who said it originally. So there we go. Okay, guys, thank you very much. I'll see you hopefully very soon. Enjoy your Sunday evenings wherever you are in the world, and catch up very soon. Thanks a lot.
If you find this video interesting, if you want to go deep into the Axia training method and how our trading team of 7-figure traders develop setups and strategies and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.